Hello, traders. Welcome to this special report on the Federal Reserve's first rate decision of 2025. In its first meeting of 2025, the Federal Reserve has maintained interest rates at 4.25 to 4.50%, marking a significant shift from its previous easing cycle. This pause follows 3 consecutive rate cuts in 2024, where the Fed reduced rates by 50 basis points in September and 25 basis points each in November and December. Fed Chairman Jerome Powell struck a notably cautious tone, emphasizing that the committee sees no need to rush any adjustments. This stance notably contrasts with political pressures, including calls from President Trump for lower rates. Powell reinforced the Fed's independence, stating decisions will remain purely data-dependent. The Fed's decision reflects mixed economic signals. While the labor market shows continued strength with unemployment at 4.1%, inflation remains a concern at 2.9%, having risen steadily since its September 2024 low of 2.4%. The FOMC notably removed previous language about inflation, making progress toward their 2% target. Markets responded negatively to the Fed's hawkish tone, with major indices declining. The Dow Jones fell 0.31%, while the S&P wink with tongue sticking out 500 dropped 0.47%. Market expectations for a March rate cut have significantly diminished, with probability dropping to 22% from the previous 31%. Looking ahead, the CME FedWatch tool indicates a 61% probability of 2 quarter-point cuts by year-end, targeting a range of 3.75 to 4.00%. However, these projections remain highly dependent on incoming economic data, particularly inflation trends and the impact of new trade policies. Now, let's go to the chart now. Looking at the US dollar index, USDX, the technical picture shows interesting price action near key levels. The index is trading within defined resistance levels at 108.22 and 109.47, while support levels are established at 106.61 and 105.42. The price is currently testing the 20-day moving average, red line, which has shifted from support to potential resistance, suggesting a possible change in short-term momentum. This interaction with the moving average will be crucial for determining the next directional move. Key levels to watch include immediate resistance at 108.22, which if breached could signal a move toward 109.47. Support at 106.61 represents a critical level that needs to hold to maintain the current structure, with 105.42 providing secondary support. As always, remember to implement proper risk management strategies before entering any positions, particularly given the Fed's recent policy decision and its potential impact on dollar movements. That's all for today. See you in the next analysis video.